Abhisar Jain, who is the Senior VP Metals and Mining at Centrum Broking, who looks at the stocks, joins in to discuss this. Abhisar, hi, thanks very much for taking the time out. First, your view in terms of why exactly both HEG and Graphite have seen the sharp falls of over 30 to 40% on a month-to-date basis. It's probably maybe something to do with the graphite electrode industry fundamentally changing, considering that both the stocks have fallen in similar proportions.
Yeah, so, coming to the possible reasons for such a sharp fall in, such a short time, as you pointed out, we believe that there are, few factors. However, we obviously believe that the fall has, been much more than expected. But coming to the reasons, so, there is obviously a fall in the steel prices and the steel spreads in the last 3 to 4 months, triggered from, the fall in steel prices in China and possible expectation of a slowdown in demand at a global level in steel, as well as in China. So the steel spreads have seen a reduction with steel prices falling by around 15 to 20%, and that is possibly resulting into a tougher negotiation by the steel makers for their graphite electrode supplies and showing up in the fall in the graphite electrode prices themselves. Secondly, we have also seen the rise in the needle coke contract prices because the needle coke, which is a key raw material for the graphite electrodes, that follows a 6-month contract cycle, and it was coming with a lag. So for H1 CY19, the contract prices for needle coke have been settled at anywhere between $800 to $1,000 higher. Thirdly, there is a continuation of graphite electrode exports from China, although we believe that these exports are of low quality electrodes, which not necessarily competes with all the high quality exports that the top 6 companies, including the 2 Indian companies, do. But nonetheless, the GE exports from China have gone up by 20% year on year in CY18, and that obviously is putting pressure on the global supply at the margin and also in the the lower grade electrodes. And lastly, India exports electrodes to Iran, which forms around 8% kind of a share. And we've seen sanctions on Iran leading to, stoppage in supplies to Iran, which in turn has put some pressure in terms of the supply being a little bit higher in the domestic market. And hence the UHP prices in the domestic market for the January to March quarter have been negotiated at around 10 to 15% lower. So these were the few reasons, which have played out in the last 3 to 4 months, which has led to the price fall.
Yeah. No, I mean, we spoke with HEG only, 2 or 3 days back, and he kind of explained all these reasons in a great bit of detail. Where does it leave investors? How do you value these stocks? I mean, what's the... And just give us a framework for that.
Yeah, so see, what we think is that, yes, these reasons have been there, but, still the structural demand supply, which has, turned favorable for this industry over the last 2 years, that I think continues to remain in place. So if you were to look at the structured demand levers, the EAF share, wherein, the graphite electrodes go, that continues to improve at a steady pace at a global level. Even in China, the EAF share has now doubled over the last 2 years, and it will continue to increase from the current 10-11% level to the extent of maybe 20% in the next few years. And UHP electrodes, which constitute 70% of the sales for the Indian electrode producers, the Graphite India and HEG, those are of high quality, and they can't be replaced by the low quality electrodes that China exports. We feel that 70 to 75% of the total electrode demand thus will not be impenetrable by the Chinese exports. And also the needle coke supplies remain tight. So while we believe that yes, the reduction in the steel spreads and the increase in the GE exports of the low quality from China will impact the margins, because the margins in the industry had gone to astronomical levels. In H1 FY19, the companies made $10,000 per ton EBITDA. But we feel that the structural upcycle will remain, and EBITDA per ton should eventually settle at anywhere between $3,000 to $5,000. That's a broad range. We will come to an exact range in due course.
Can you just tell us, we're running short of time, so if you can just tell us what your rating on graphite is currently, and what's your expectation from this quarter's numbers, and what kind of client queries are you getting on both the stocks as well?
So as of now, we have a neutral rating on Graphite India. We would be revisiting our estimates, once the company reports the numbers. We expect the Q3 numbers to be still strong, though lower than the H1 profitability, but we feel that the reduction in EBITDA per ton will not be huge as of now. In terms of the client interest, it's still trying to understand at what level the spreads, would stabilize in the next 1 to 2 years, which I was just giving you in the previous query that we expect that the EBITDA per ton could find its, stability at around $3,000 to $4,000 per ton eventually in FY 2021 and then sustain there.
Telling your clients to buy at current levels?
So we necessarily don't remain too negative at the current levels. We feel that the fall has been exacerbated, and we definitely have a target price. The earlier target price was much higher than the current levels. So we would be recommending a gradual addition from the current levels is what I feel.
Oh.
But our rating currently is neutral. So, we will be revisiting in our note after the results.
Okay, all right, Abhisar. Thanks very much for joining in and talking to us about HEG as well as for Graphite. We need to take a break now, but up next we'll tell you what's buzzing in the commodity.